and welcome to Magicbricks Now. You are watching Property Hotline with me, Kavita Krishnan. We are joined by Harsh Roongta today. He's a chartered accountant and a SEBI registered investment advisor. He'll be answering all your questions related to home finance. Let's get started. Harsh, welcome to the show.
It's a real pleasure.
We have Dinesh who's called in with a question. Dinesh, how can we help you? Okay, I think there's a problem with Dinesh's line. Let's take a question that's come in on email now. So Mehboob has written in and he says that he took a housing loan for 30 lakh rupees from a housing finance company in February 2013. The tenure of the loan was 15 years. He's been paying the EMIs for the last 42 months. He now wants to repay the entire home loan at a time by selling his flat. Now, the rate of interest was fixed at 10.25% for the first 2 years and floating rate for the rest of the tenure. How much amount does he have to pay to the housing finance company? What is the actual and the interest amount that he would have to pay? Are there any charges that he has to pay for prepaying the loan? So essentially, Harsh is asking you for a quick calculation so he can be prepared when he does end up paying that loan.
So I think clearly two questions. One, I think, is there any prepayment charge? That's an easier one to answer. See, when you're taking a loan from a housing finance company and the prepayment comes from anything other than transferring the loan to another lender. So once it is on floating rate loan, you can prepay without any charges. Even if it's a fixed rate loan, as long as you're not transferring the loan to another lender, which in this case is selling off the house, there are no prepayment charges. In any case, I think he has moved beyond the fixed period, 24-month fixed period. The calculations, obviously, you will have to talk to the housing finance company and get it. One quick way to do that is to ask for a copy of your amortization schedule. Amortization schedule is nothing but a fancy word for giving you breakup of every installment into the principal portion and the interest portion. But that is at the beginning of the loan. After 24 months, your loan was a floating rate loan, so it could have changed. So get that figure from the housing finance company itself. Assuming the rate has remained 10.25%, I have just done a very quick calculation. The repayment so far would have been about 3 lakh, your EMI would have been about 32,700 and the outstanding principal would be about 26.5 lakhs, and there are no prepayment charges. Exact figures you will get only from the housing finance.
But even then, it would be in around the same ballpark, right? You're saying around 26.5 lakhs. So a little more, a little less, but that is what you essentially need to be prepared for. Also, Harsh, a quick question here. Now, we do get a loan statement every year. Now, even that statement should give you a sense of the amortization schedule that you spoke of, right? How much of the loan is left, how much of the principal is left, how much of the interest is left, is a part of that statement.
So the best way to do is take your last year's statement that will give you the principal outstanding as on March 31st of the last year, and then from there you can sort of work it out much more easily.
For those who are internet savvy, can you get the current status online, or would you just get an annual status?
I think every single lender today, whether it is a housing finance company or a bank, is able to give you your housing loan statement online. So there is no earthly reason for you to run around or even to get your tax certificate. Everything is now available online. Most lenders are able to give it to you online.
And Mehboob, that's the reason why we keep saying on this channel that just taking a loan and sitting pretty does not help. You need to be proactive. You need to manage that loan consistently, which you have been doing. So what you just need to do is, if you're already doing net banking, then you just need to go online, check your account, check your loan account, and you should get all the answers to the questions that you've asked us. And the important thing, however, is that you don't need to pay any prepayment charges because your loan is on a floating interest rate. We have Mr. Bijur who's called in now. How can we help you?
Should I? Hello.
Yes, Mr. Bijur, go ahead.
Yeah. See, my son has taken a flat in Mysore. He had approached a bank for a loan. It's getting delayed, and I want to complete the transaction immediately. So supposing he avails of the loan post purchase of the flat, would he be entitled for the tax benefit of interest and all? And second thing is, I want to part finance the activity either by a loan or a gift. If that is the case, what are the tax implications for me as a father? And two, what is the documentation required to record either this loan or a gift?
Okay. Couple of questions over there. He wants to help his son out who's buying a home.
So how would you
How can he
complete
go
the
about it?
transaction immediately, Mr. Bijur? Would you sort of become the borrower yourself, or would you gift that money to, or give that money to him?
Mr. Bijur, you'll need to mute your
Basically,
television
the total
set.
value of the transaction would be about 40 odd lakhs.
Right.
Right. Mr. Bijur, you'll need to mute your television set because that is causing some disturbance.
Nice, Ankit. See, the total value of the transaction would be 40 odd lakhs. He is not entitled for that full loan benefit.
Okay.
Right? He is entitled only for part of the loan.
Okay.
And that loan processing is getting delayed.
Right.
So, and the seller is not willing to wait.
Right.
What I wanted to do was finance the full transaction, and probably he gets a loan of 15 lakhs after the transaction is
No,
completed.
Mr. Bijur, which is what Harsh is asking you, how do you plan to finance that transaction? Is this money that you've saved up, or are you going to take a loan?
No, I have my savings. From my savings, I want to finance the transaction.
Okay. Got that. So here are the answers. One, you initially.
No, I am a retired employee, so from my savings, I want to finance the transaction.
Fair enough. So I think the point is that you, if I were to restate what you said, you would loan this money to your son. Part of this loan would be paid back by your son possibly when he is able to get the loan from the finance company. I think effectively that is what you are saying. And the loan that you give him, you may or may not charge him interest, or you may even give it to him as a gift. I think that essentially is the transaction.
And he wants to know which is the most tax prudent way to do it for, in both their cases, in his case and in his son's case.
So first, if you are giving it to him on loan and charging him an interest, then that interest is deductible in his hands. If he is paying taxes, it is deductible in his hands. So whether it is the loan is from you or from a bank or a housing finance institution, it does not matter. The interest portion is deductible. The principal portion is not deductible if the loan is from you. Even if he ultimately gets the loan from the housing finance company as pays you, then the interest he pays to the housing finance company will also be deductible. So I don't think there is any doubt about that. The amount of money that you give to him, if you give it to him as a gift, then there are no tax implications really, because gift received from parent is tax free in his hands. There is no tax on people who give gifts. So there is no real tax implications that I can think about in this particular case.
So Mr. Bijur, what you can do is you can essentially structure it in such a way as in you're gifting that money to your son. That is one thing that you can do. The other way, of course, is like Harsh just said, you can also lend that money to your son, and you can, of course, charge interest on that. Your son can avail tax deduction on the interest that he's paying to you, but he will not get any tax deduction on the principal. Right, Harsh?
Yes, and if your son is paying you any interest, please remember that interest is taxable in your hands. So please include that in your income tax returns.
And very quickly, Harsh, what is the documentation that both Mr. Bijur and his son have to keep ready when they file their taxes?
All that is needed is that if it is a self-occupied property, the certificate of a kind that a bank issues, you can keep it ready. It need not be submitted along with the return. Nowadays, with returns, you cannot submit anything. Just keep it ready. If there is an assessment that happens, then it might be needed.
Right. So simply draw up an agreement which is very similar to that, to a loan agreement that a bank or a housing finance company gives you, and keep that ready. That's all that you need to do. Anis has called in from Mumbai. Anis, how can we help you?
Hi, I have a more of a financial planning question.
Okay.
I have outstanding loan of around 44 lakhs from LIC Housing Finance.
Mm-hmm.
Okay, and it's been 3 years. 3 years back, I had availed this loan, and now I am contemplating whether I can pay part of this loan with my PF fund, which is around 25 lakh at this point of time. Looking at the interest which I am paying already, whether that makes sense.
Okay, what interest rate are you paying for this loan, Anis?
Right now it's 10.5%.
10.5%.
And what is your, is your income above 10 lakhs, taxable income? Is it above 10 lakhs, above 5 lakhs? Where would you fall?
About 10 lakhs, yeah.
About 10 lakhs.
Above 10 lakhs.
30% tax bracket, yeah.
Okay.
Right.
Okay.
And he wants to use his PF funds to prepay that home loan. Would you advise that?
So your PF fund, did you mean employee provident fund or did you mean public provident fund?
No, employee provident fund.
Employee provident
But
fund.
how would you be allowed to withdraw from there?
I understand that if you want to withdraw it for for furnishing the loan, you can do that. I got this information from my office.
Okay, so I would suggest that you recheck that on regulation alone. But let's move to the financial planning question that you have. Typically, the first thing is that whatever money you have for your EPF is essentially meant for your retirement, and logically you should not really use it to pay back a loan taken for your own home. That's a conceptual thing. Secondly, if we just look at even the financial implications, on your PF, you are getting an interest rate of about say 8.5% post-tax. On your home loan, today you are paying 10.5%, which is way too high. You should not be paying anything more than 9.35 or 9.5 at the most. But even if we assume 10.5%, because of your 30% deduction, the effective tax rate that is coming on this is about 7%. Is this a self-occupied flat that you have taken a loan for, or is it rented out flat?
It's a self-occupied.
Okay, and the loan you said was about 40 lakhs.
44.
44 and owned only by you or also with your spouse?
Only by.
Okay, then I think there is a point here, because any loan above 20 lakhs, the deduction, maximum interest deduction that you get is 2 lakhs. Anything more than that is not really deductible for a self-occupied property. So on 44 lakhs, you're typically paying interest of about 4.5 lakhs, of which only 2 lakhs is deductible. On the balance 2.4 lakhs, your tax rate is your interest rate is as high as the actual interest rate. It is currently 10.5%, you can probably move it down to 9.5%. So you, definitely from a purely financial point of view, you can look at withdrawing your EPF and paying off your loan up to about 24-25 lakhs, because that is costing you 10.5%. You're not getting any tax deduction on that.
But Harsh, I just want to bring in a contrarian view over here. I'm not talking about I'm not even looking at the tax calculation. This is what we've always been told, we've always learned. The fact that the PF money is money that you have set aside for retirement. It is your cushion, essentially, because we don't have social security in this country. Now, keeping that in mind, and the fact that, Anis is looking at a 44 lakh rupees loan, he's already paid off 3 years of that. Would you suggest that he actually withdraws money from his PF just to pay off that loan? Or because, like he told us, he falls in that bracket, in the over 10 lakh rupees bracket as far as salary is concerned, would you rather he invest more prudently and use that money to pay off the home loan? What would you say?
See, in terms of I did mention that from a purely conceptual point of view, what money you have kept aside for retirement, you should not use. Forget whether it makes financial sense to do it or not. But if you were to just look at just the numbers, the answer is up to 24 lakhs. Maybe you should look at it. Should you rush to do it? I would also agree with you that you need not rush to do it. Okay, but to the extent you can pay back this loan faster, it may not be a bad idea for you to do that.
Okay, so Anis, essentially it's a call that you need to take. You need to see whether you've invested enough to secure your future, and if you have done that, then probably yes, from a tax perspective, it makes more sense for you to withdraw that PF money and pay off that home loan. But again, this is if you already have a financial cushion in place. The other thing, of course, what Harsh told you is that you are paying a very high rate of interest. You are at around 10.5, and if you look at the numbers that we're showing you on the screen right now, these are the interest rates that are being charged by different banks, by the leading banks and home finance companies. All of them are ranging between 9.5 to 9.45%, which means what you're paying is almost a percentage point higher over there. So that is something that you really need to renegotiate. So if you do plan to stick on with the home loan, what we would recommend is that you go talk to your banker and tell them that you would like a better deal, or you would look to shift your loan to another bank or housing finance company, because even if you look to shift at this point in time, you'll get a much better deal than what you're paying, than the 10.5% rate of interest you're really paying for your home loan. Right? Time with that for a quick break on Property Hotline, but we'll be back to answer more questions. Welcome back. You're watching Property Hotline with me, Kavita Krishnan. Harsh Roongta is in the studio answering all your home finance questions. Venkat Rao has written in on Facebook. Now, Harsh wants to know if he can stop EMI payment if a developer gets into legal trouble in the High Court and there is no progress in construction. We are hearing a lot of this of late, Harsh, and that's also because that of course, here he's talking about legal trouble, but we also are seeing a lot of project delays, especially in the NCR market. And we've had buyers writing in and asking us if they should stop EMI payments because they don't see the home that they're really paying for. What would you recommend?
So there are two ways to answer this. One, of course, is the legal answer, and which is very correct. You have chosen the project on your own. I mean, having chosen the project on your own, the bank has only provided you finance, so you cannot stop the payment to the bank. Typically, if the project is still under construction, you are effectively paying interest on the amounts that have already been disbursed, or what is technically called as pre-EMIs. If you delay those payments, please remember your credit history is going to be affected, and your ability to take loans in the future is going to be affected. So clearly, technically, you have to pay back the loan. Now, I think increasingly what we are also seeing, so the con answer to that is, increasingly what we are seeing is that banks, some banks at least, are actually pushing projects. You see these big ads.
I was just coming to that. Right. I wanted to ask you, because you have banks who are saying that this is a bank approved project. That is one. Now, we also see a lot of banks getting into these tripartite deals, where there is a developer, there's a buyer, there's a banker, and what they're essentially saying is that 10% now, 90% on possession, and then the project gets stuck. So in that case, can the bank be held liable?
Legally, no, but I think there is a very good case for all the buyers to get together and put pressure on the bank that if you are not going to take care of this, we are going to stop paying. And I think courts will be extremely receptive. This is a clear risk that banks take when they act like brokers. okay, if a bank is going to be a broker and is going to make money on the sale, okay, then very clearly it will have to, and probably this liability will get crystallized when the Real Estate Regulation Act comes. If officially, so you now have banks acting as brokers. Almost all the top banks have realty
broking
arms,
arm,
right? And those realty arms would be liable under RERA. So I think very clearly this is something that the banks need to think about, that if they are going to use, they are going to allow the use of their brand to selling a project, then if that project is delayed, I think buyers would be reasonably justified in
So essentially, you're
holding.
saying if there is like a tripartite agreement, or if the bank has actually sold you that particular home, on behalf of that developer, if the bank has a vested commercial interest in that sense, then come together, file what is called a class action suit, take the banker and the developer to court.
It's not as simple as that, but my point is, legally speaking, you still have to pay the bank. If you read the document, you still have to pay the bank. But I think there is something beyond documents, and courts are now very receptive to action, class action suits, I don't know, but common joint suits filed by affected parties, especially when on the other side you have big players like banks and developers.
And we are seeing a lot of that. A lot of buyers are coming together. So Venkat Rao, especially if say you are stuck in a project like that, one advice that we would give you is, of course, that like Harsh said, continue paying your EMIs. But the other thing you can also do is go online. A lot of buyers are grouping online. They are connecting with each other. They are forming associations, and then they are taking on developers in court. In your case, of course, if you are in a situation like Harsh just described, then you can probably also take on the bank in court and see what comes of that. But do go online and check, because your strength as a buyer does lie in numbers over here, and we've seen that when buyers group together and go to court, a lot of good comes off that. Harsh, I can see that you want to say something more.
So I think generally, if you look at these situations, typically your interest and the bank's interest are actually coterminous. The bank's money is also stuck when the project gets stuck. But the key is the bank tries to take that money from you. If everybody gets together, then the bank realizes that the buyers have got together. Let us jointly do something to make sure that the developer develops it.
Yes, but till then, you will have to pay your EMIs. There is no escaping that, right? With that, we are nearing an end of this episode of Property Hotline. Harsh Roongta, thank you very much for coming in, answering all those questions. And if you have any questions, anything whatsoever, it could be buying, selling, investing in real estate, it could be legal issues, tax issues, or home finance issues, do send in your questions. We'll get the country's top experts to answer every single question. Thank you very much for watching. Stay tuned for more news and updates.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.